What is going on, traders? Welcome back to the Traveling Trader. In this video, I will be going over the market crash update. Not really a crash, obviously just a pullback for now. I did a video January 29th talking about what my feelings were towards the potential of a pullback happening in the February-March timeframe. Obviously, nobody knows exactly when it's going to happen. A lot of it is subjective. There are some things that we can take a look at from a data perspective to give us a little bit more insight. But you do, at the moment that you feel like the market is getting too frothy, you start tightening up your positions. Obviously, we didn't stop trading. I still, sent out trade alerts. I still did videos on trades because there are infinite examples of people who try to time the market and they end up staying out for too long and miss 2, 3, 4 years of a bull run. You want to let the market prove to you that it wants to correct. And if you did your job by buying on the dips, buying cheap quality stocks and not really FOMOing at the high, then you can afford a little bit of a drawdown until the market figures it out. So in my view, we currently are not in a bear market. I don't think a bear market will happen. I will state again what I stated back in January. I don't think a bear market will happen back to back. We've never had it in the American stock market. And I will revisit those metrics that I talked about in that video from January and see if we're any closer to finding out whether we do have a more serious crash up ahead. And then towards the end of the video, I will tell you what we bought on the dip because that is important. We did buy stocks today on the dip. There were so many juicy opportunities to pass up. Now, the obvious question that arises, especially from newer traders that have never seen market corrections before or pullbacks before, the obvious question is, how do you know it won't go down further? Why are you so comfortable buying here? The real answer to that is you don't know, but also there should be an addendum to that answer, which is you should not care. Because if you're buying quality stocks like Apple, Tesla, Facebook, AMD, if you're buying quality stocks on major dips at major support levels, right, at important support levels, like you can use some of the moving averages or the actual support levels from the patterns that you draw or Fibonacci, whatever tools that you use. But if you identify an important support level and you buy quality blue chip stocks on those significant dips, then you already did yourself a favor. And if a stock like Apple drops some more, what are you going to do? Not buy it? I mean, is anyone willing to bet that Apple's not going to be worth more than it is today come 2, 3 years time? So that's the other thing, is that during a market pullback, you want to focus on long-term blue chip stocks, in my view. Trying to swing trade, unless you know what you're doing with regards to options where you can hedge your position using certain options, which we will talk about a bit in this video. But in general, what you are buying are quality stocks on the dip. And then you can also sprinkle a few positions around maybe some more riskier penny stocks or whatnot. So let's get right into it. Are there any clear signs whether we are going to see more of a correction up ahead, or are we looking okay, and can we tell whether the market has stopped the bleeding? And then, like I said, I will give you my trades. But before I get into it, if you get anything out of this video, leave it a big fat thumbs up just like this. If you want access to all of our trades, all of the trades that we bought today on the dip, and then our trades in general, link is in the description below. And let us get right into it. So one of the charts that we looked at before is the NYAD chart on stockcharts.com. This is a chart that highlights the advanced decline of the American stock market, specifically on the New York Stock Exchange. But back in January, I said that if we fall below this line, because we did start trending down, and if we fell below this support line, then I would venture to say that we are heading into correction territory. But we kept going up in February, and now come third week of February, we are starting to see a little bit of a pullback. Now, if we break this line, meaning that if this week, this advanced decline line starts falling below further, then I would bet that we are likely to see a correction of 10% or more in the market. Now, here's the crazy thing. If you look at the S&P, we wicked down to the 50-day moving average, a major moving average, a spot that we did hit back in January when I did that video. So we are basically at the same spot. Now, we did see a full-on correction last year in September, and in November, we had a double bottom correction. This was well over a 10% drop for the S&P. And guess what? You guys survived it. So for those of you that are fretting over a small pullback in the market, and obviously you're seeing probably a lot of red in certain parts of your portfolio, just don't fret. I mean, look what happened here in this double bottom crash. You guys might not have even been around. A lot of you are so new, you might not have even been around in September and November, but we had a double bottom correction. Twice we went over 10% drop, right? So in this case, we are now holding at the 50 major moving average, the 50-day moving average on the S&P. And a lot of these stocks are at their major moving averages now as well. So when I see that, that is my first line of defense, meaning that if I want to buy quality blue chips at a discount, then I will use this as my first entry point. And it could very well be breached. Like, what if we do hit the 100-day moving average again, like we did back in September and in November? Well, I will likely buy some more. And again, these are pretty low risk stocks for the long term. I'm talking about Apple, Facebook, Tesla, Google, Amazon, Microsoft, etc. Obviously, they don't have to all be tech. You can get into Home Depot and Coca-Cola and McDonald's and Walmart. Walmart is actually a great buy. That was one of our buys. So back to the NYAD line. Again, if we drop more on this NYAD chart, some more this week, if we fall below this red line, then I will venture to say that we are probably heading towards correction territory, and we could see the 100-day, maybe even 200-day moving average. But for now, I'm not trading as if that's the case. I am just investing in cheap quality blue chip stocks, or cheaper, I should say, because they're not really cheap. The next thing we want to look at is the NYSE highs and lows, another thing that I talked about in my last video. Now here is what is really encouraging. This is basically the totality of stocks that are creating new highs. And as you can see, we have a healthy uptrend, no pullbacks yet. So if I'm looking at this and I see that the indexes are at the 50-day moving average, I would venture to say that we are not heading towards correction territory. We need this to drop. We need there to be a drop in the new highs. We need the totality of stocks that are on the New York Stock Exchange to start making new lows and this to decline. Until that happens, I don't think we're heading towards correction territory. All right, so with that said, what did we buy on the dip? Well, I gave some of it away in the beginning by saying that we are focusing on major blue chips. Let's take a look at Facebook. And our Facebook leaps actually did really well today because Facebook gained 2%. Facebook is at the 200-day moving average, so we definitely bought some Facebook here. Look at Amazon. Amazon is at the also around the 200-day moving average. If we look at Apple, Apple has not seen these levels since all the way back in November when we had that previous correction. And Apple already hit below $120 today, sitting at the 100-day moving average. Definitely bought some Apple. And don't worry, yes, I will be talking about penny stocks as well, so just give me a minute. If you look at Walmart, this is another stock that now it actually dipped just below the 200-day moving average, but it has done this before. So Walmart doesn't make a habit of stopping right at the moving averages. Take-Two Interactive, which is a video game company, again, this was at the 100-day moving average. Absolutely killed their earnings a few days ago, so definitely got took an opportunity to buy some Take-Two. What about NIO? What about Tesla? Well, let's take a look at NIO. NIO's at the 100-day moving average, falling below $50 for the first time since last year. If you look at Tesla, this was a monster buy. A lot of you complain about Tesla never retracing. Well, Tesla now is at the 100-day moving average, so definitely was happy to pick up Tesla at near $600, which is insane. It is back up to almost $700. What about ARK? A lot of you also complain that ARK never dips. Well, ARK did have a nice dip almost to the 100-day moving average at $126. We had a 20% dip from all-time highs on ARK. So we definitely bought some ARK. Again, these are quality stocks. These are stocks that will do your portfolios good. In a year, 2 years time, you will look back at these prices and be like, holy hell, I can't believe I bought them at a 20 or 30% discount. Now, another thing that we did, and I posted this in my video on CCIV yesterday, another thing that we did was sell puts on CCIV. So we sold the $30 puts on CCIV, which was a pretty easy move here, especially since CCIV dropped all the way down to 35, and we got a lot of premium for selling the $30 cash secured puts. if CCIV does hit $30 and we get assigned, then we would likely buy CCIV, or we would have to buy CCIV at $30 minus the premium that we got for those puts. We did also have a call debit spread options play on Tesla too. Now the CCIV short put is already up 60%. And the Tesla spread was already up by the end of the day. It was already up 30%. That definitely makes up for some of the losses that we sustained in some of our options positions on this market drawdown. Had a losing call on ICLN, had an ARKG call, which is still down, but we have a lot left to expiration. I'm not really worried about that one. All right, in terms of penny stocks, what did we get into? Well, I've talked about some of these before, but AITX. AITX had a monster drawdown to the 50-day moving average. It wicked, and then it had a significant price rally thereafter. From the wick all the way up, we saw an 84% gain. Obviously, I didn't catch the bottom of this wick, no way. However, if some of you did have a limit order at the wick or at the 50-day moving average, then good job. You're up 84% on what was supposed to be a crappy down day, especially on AITX. Now, if you're not new to this channel, you know that I love this penny stock. I'm really bullish on it. And today it announced that it got the largest order ever received from a Fortune 50 client, AITX did, for its RAD products. So that is part of the reason for the bounce and the incline here. But happy to pick up AITX after we sold for profits when our trailing stop hit on the way down here. I was happy to get in here. Wish I got in at the 50-day moving average. I didn't. I caught it a bit late, but still happy to buy it lower than I got out for. ABML was another one that we got into today, and this one also had a monster wick. And if you caught the bottom of the wick, then you were up 58%. Again, I did not obviously catch the bottom of the wick. However, happy to buy ABML. CNBC actually had a segment today on battery metals recycling. And it is definitely an industry that is still in its infancy that is sure to see hyper growth. So happy to buy ABML here. A cannabis stock that we got into, High Tide, HITIF. This one also had a crazy wick. A lot of these penny stocks that we've been focusing on, they just had these insane wicks and recoveries today. This one is up 41% from the bottom of that wick. I bought it at the 21 EMA, so I didn't buy it at the bottom of this wick, but happy to buy High Tide at a major discount because from the all-time highs, or the recent highs, I should say, we were able to get High Tide for almost a 40% discount after taking profits. So got into High Tide, really bullish on this cannabis stock. Now, one that I talked about before that I'm interested in getting back into is TSMP, Tesoro Enterprises. This is the one that's merging with Humble. It is back at the 21 EMA. I think this is a great buy point and showing good resilience here in a market downturn, just getting stopped at the 21 EMA like it routinely does and hasn't blown below that. Now, you know, time will tell, but I am comfortable getting here and maybe putting a stop limit below my entry. And the last penny stock that I'll talk about that we got into is AQMS, Aqua Metals. You guys know that I'm really bullish on this stock. Was happy to buy it at the 50-day moving average. Another monster wick here, looking like a dragonfly doji, hoping for a reversal from the 50-day moving average, but happy to buy it below $5 for sure. Anyway, traders, that is it for this video. Those are my thoughts on a market pullback, whether we will have a market crash. I reintroduced you to the charts that I'm looking at on stockcharts.com. These are charts that you can pull up and monitor on your own as well. And I told you what I was buying on the dip. For the full list of my stocks and options plays, link is in the description below. Join over 4,600 traders in the group. Thankful to each and every one of you for making the community what it is. Leave a comment down below. Let me know what you bought on the dip or whether you are waiting because you think that we are going to dip further. Leave a thumbs up, subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.